All right, folks. This video is about how to make the most of strong trending markets. Now, sorry it's been a while for the video. Just with these different screen recording softwares, they're just all not liking Chromebooks for whatever reason. And I'm just trying to see what the best is to go forward with decent audio quality and I can get my point across. So this is a trade that I've taken today, and it's simply because the last 4 hour very strong bullish, and more importantly, because it's such a quick trade. Usually these trades are taken, and I'm wanting to be mostly out the trade within 15 minutes, half an hour. It's a quick trade, just taking that quick momentum before any kind of real pullback occurs. So, there's people on the internet. There's people that trade like this every single day. In terms of they look for a strong 15-minute candle in that direction of a trend, and then they trade, or they wait for a breakout of a range on the 15-minute, and then they look for a continuation basically. So this is your range, breaks out, and then I like to enter above the highs and then looking for that push. So to me, that's not the best way to trade on a day-to-day basis, because not every single day will you be able to find that the kind of movement that is required, the kind of strong push in one direction without any real kind of pullback that doesn't even last 15 minutes or more. So the environment for these kind of trades are less often than what people think. But it's something that if you were going for funding, etc., and you were looking for a quick trade that can just get things rolling for you, then it's something that I would advise. So the trade expectations are within 15 minutes to 30 minutes, you are expected to be taking at least kind of 70-80% of the move. For me personally, I don't risk more than 0.5% on these trades. And the reason why is because on the higher time frames, I like to be entering whenever we have had a decent pullback. So my stop loss is therefore more protected on the higher time frames, at least the 1 hour, that then allows me to kind of make the most of the trade. Whereas and give the trade the kind of a more of an opportunity that I'll actually be able to stay in the trade for longer. Whereas with this particular example, because it had closed beyond, it was at the new highs of the day, which again is something that I don't recommend, to be getting in at the highs or the lows of the day and expecting the trade to last long. I'm just looking for the initial the kind of the momentum to continue. That initial push should just continue before it starts going into a range or pulling back. So with this particular example, I was able to get protection of the 1 hour, but it didn't really mean that much to me because it was the first 15 minute of the 1 hour that I was using. I was using the 10 to 11 1 hour low, but I was entering after the 10 to quarter past 10 15-minute candle close, which is obviously the first 15 minute of four 15-minute candles that make up an hour. So if you're entering on the first 15 minute, you've still got three more candles on the 15 minute, 45 minutes still to go, and it's a lot lower kind of probability that the low of the 15 minute, that is the low of the 1 hour at the time, is going to also be the low by the time the 1 hour is finished. Now, that wasn't an issue for me because I was essentially just looking for a quick push. You can see the prices essentially got to my main target point of around 20 pips and then has gone sideways for a good hour or so anyway. So it's not I'm not really missing out on that much. I close 70% of my trade whenever the next 15-minute candle close, so 10:15 to 10:30. I took the 70% off, left the 30%, moved my stop loss to just below the lows of this current 15-minute candle. Not quite at break even. I just wanted to give price a wee bit more room, and then set some more alerts. But that's essentially what I would suggest for catching strong momentum trades. Is you look for a range, just as how I would look for one on the 1 hour, and then look for that break and close beyond, and then just look for that kind of immediate momentum to continue, but being aware that due to this kind of trade, you should be lowering your risk. This is essentially a trade that you want to be taking because you feel as if you're not going to get a deeper pullback kind of trade before price continues on. And the expectations of the trade should be definitely less than an hour. I would recommend that you're taking most of your profit within 15 minutes to 30 minutes, so 1 or 2 15-minute candles. You're getting in on the immediate momentum and you're expecting price to continue, just as how I would usually expect myself to be in a trade on the 1 hour chart for 2 or 3 candles, aka 2 or 3 hours. If I'm doing similar on the 15-minute with room to go on the 1 hour and the 4 hour and showing me immediate momentum, especially in the 1 hour with the last 1 hour close, etc., I've got to expect that I'm going to be in and out that trade within 15 minutes to 30 minutes. And anything more than that is a bonus, rather than expecting myself to hold the trade for as long as I would if I was in on the 1 hour chart. So as you can see, it's hit my last high on the 4 hour from last week as well, which was kind of another reason for the main target of what I had. Just going with the immediate momentum. The last 4 hour was strong bullish, but again, it's almost the 4 hours almost like how I would usually look at the daily, and that it's almost too large for this kind of trade. I'm just looking last 1 hour strong bullish, last couple of hours strong bullish, and it's closed beyond the highs of the previous. I'm just looking for that continued push, see where it goes, and take profit when it makes sense. So yeah, I hope that you can utilize this style of trading for whenever there's really strong trend and price doesn't really go sideways on the 1 hour. It's just constantly in the same direction on the 1 hour. So therefore, you have to go down to the lower time frames for a range to then take the trade. But what I would suggest is you don't look for these kind of trades every single day, because simply the momentum is not there often enough to make this kind of trade style valid. It's just whenever you're really going strong in one direction and you want to make the most of it, or at least get something out of it, to then make the trade worthwhile. I would definitely advise against risking the full amount as well, because you're at the highs of the day. You're beyond the highs of the last 1 hour. Well, I was whenever I entered, beyond the highs of the previous 4 hour. A lot of that is just basic knowledge for me that I should expect a pullback sooner rather than later. But if I can get a push, it's quite similar to how I trade on the indices. Well, the S&P, if I can get a push that's big enough that makes the trade essentially somewhat worthwhile, then as long as I'm out by most of my position, 7 to 80%, before it then starts any kind of decent pullback, then I call that a successful trade. And that's what I would recommend for you to look at. So to round up, basically you want strong momentum in your direction. You want clear candles in your direction on the 1 hour, strong body closes. You don't really want too many wicks. I mean, you can see here strong body, strong body, strong body, getting that next push. That's all you're looking for. Strong body close in the 15-minute above the range, and then just looking for an entry above the highs of that and looking for the push. I mean, if you were to micromanage, you can see on the 5 minute we just have the the push, this is the main candle of the 15 minute. On the 5 minute, just enter above and then it's off. If you look on the 1 minute as well, you can see that even the stochastic is overbought basically. So to me, it's just pure momentum. Essentially, with the stochastic, a way to look at this is if price gets back below the overbought, that then says the trend can be kind of fading away. And then obviously, once it really does get below, then that's whenever it starts to drop. You do get a deeper pullback on the 1 minute. That is more of a traditional entry for me in terms of a deep pullback on the 1 minute, looking for the opposite side of the stochastic. But I didn't re-enter here. I didn't use that kind of style. I just looked for the kind of push with the momentum, strong momentum, and just looking for the trade to be done within 1 or 2 15-minute candles, 70 to 80%, and anything else was a bonus.